It did slightly miss expectations, Rachelle, but that was largely due to the flooding in the southwest of the country. And simultaneously, another story of the day was you saw the services PMI actually hit a record since January of 2018. So things are definitely pointing in the right direction, both on manufacturing and on services.
And so you tapped on this about some of the headwinds from the floods. What would you say are the biggest drivers and the biggest headwinds that are really affecting the data right now?
Yeah, I think the number one thing you're seeing is the effect of government stimulus in the construction and infrastructure industries. The social spending itself year on year is up about 43%, the total social spending for the first half. So that's a positive sign. You had the $500 billion fiscal stimulus package in May, and that's working its way through the system. And you're seeing deficit spending a little bit higher than normal. Historically, the red line has been 3%. You're seeing 3.7%. So a tremendous amount of effort by the Chinese government. And they've explicitly stated, Rachelle, that they want to create 9 million jobs by the end of 2020 in order to keep the unemployment rate steady at 6%. So all of these things go a long way to see the type of numbers that you're seeing both on the services and manufacturing side.
And we did see a lot of growth, particularly in cement and steel demands. Do you see those sorts of surges translating into a major pickup for Chinese factories?
Yeah, there's no question about it. You have a number of initiatives from the government in terms of the stimulus. You have power lines, you have EV charging stations, and you have a huge amount of investment in railways, close to about 120, $130 billion a year, relative to the US is much lower at 30 some odd billion dollars. So when you see this type of investment and focus into those industries, it's natural that you're going to see the type of growth and you're going to see that continued. The other thing that we saw, Rachelle, that's driving the boat is exports had been down quite a bit because the West was dealing with COVID on a 2-month lagged basis to China. Now they're coming back, and you saw exports in July go up 7.2%. So that's going to continue to add fuel to the fire and help with the global recovery as well.
So obviously manufacturing is still ramping up, but I do want to focus on demand a bit. How does the demand that we're seeing within China domestically compare to the demand internationally?
Yeah, in the short term, certainly you're seeing a little bit of a lagged effect with the Chinese consumer. Manufacturing started because that's where a lot of the stimulus was initially directed, but that's normal. The manufacturing took less social distancing initiatives to get going. The consumer, as they become more and more comfortable going out with their masks, and certainly as we get better treatments and vaccines in the pipeline, that's going to come roaring back. The manufacturing and the construction is a precursor to the consumer sentiment, which will certainly come up in coming months.
So then as we look ahead in terms of timelines, then what's your outlook in terms of demand really recovering more fully?
Yeah, well, I look at HSBC. They actually, you came from a Q1 trough of negative 6.8% GDP. It rebounded in China in Q2 to plus 3.2. They've actually taken their 2020 GDP estimates up now, seeing all the activity in construction and infrastructure. They've taken it up from 1.7% to 2.4% for 2020. So that's going to trickle through to the economy, to the consumers, and things are definitely looking constructive moving forward. The other thing, Rachelle, is you've seen money supply, M2 growth go up over 10% last month. That's also going to bode well for GDP, both for 2020 and certainly in 2021.
And in terms of the latest consumption readings out of China, not as good as expected. So how likely is that to affect production going forward?
I think what you're going to see is you've got global pent-up demand, Rachelle. So that production in the factories is going to continue. This was a short-term lull due to the flooding. We're going to continue to see that accelerate. Even if the stimulus does not keep increasing, I think there's enough momentum that's been gained from the massive action that was taken. And you're actually seeing a parallel to what you saw in early 2009, the last time they did a stimulus package. And you're seeing the demand in metals, in cement, in steel, and you can see it just in copper prices. The demand for that metal has gone up considerably, and that's China industrial demand for sure.